What's going on, guys? Today we are going to be taking a look at PayPal's earnings that they announced a week ago, and specifically we're going to dive into all of their numbers, their EPS, their revenue, but also their guidance for the full year. I want to look at what they're expecting for their EPS numbers for 2023 and take a look at how those compare to analysts and what they have expected for 2023, and then we'll look at valuation and where PayPal's valuation could be headed in the future, especially if it comes in line with the rest of the market. So if you enjoyed the video, make sure you drop a like down below, and if you want to see more videos like this one, make sure you hit that sub button. Leading into earnings, we can see that PayPal traded down in a major way. Over just a few weeks, they traded down over 13% to a new 52-week low on October 27th. However, just a couple days before earnings, the stock traded up a little bit, and then after the announcement of earnings, the stock traded up over 8.5%. And year to date, PayPal has had a terrible year. We can see that the stock is down over 26%, and it doesn't get any better even if you zoom out 5 years. We can see that over the last 5 years, this stock has fallen 36.5%, and from its all-time highs of over $300, the stock is down more than 80%. And PayPal came in with some very solid numbers for their Q3. They reported EPS of $1.30 versus $1.23 expected, which was over a 5.5% beat, and revenue came in with about a 0.5% beat, coming in at $7.42 billion versus the expected $7.38 billion. And PayPal, like a lot of other companies, has focused on profitability this year, and it's great to see them achieving their goals as they came through with a very solid beat on their EPS numbers. One thing PayPal has done a very good job at over the last 5 years or so has been increasing their revenue. We could see that back in 2018, they were bringing in around $14 billion, all the way up to maybe $15 billion. And now they have grown that all the way up to $28.5 billion, so over doubling their revenue numbers. The only concern is over the last year or so, we have seen their revenue growth fall into single-digit growth numbers. And sadly, the growth did not increase this quarter. We could see that last year they brought in around $6.84 billion of revenue, and that has increased up to $7.42 billion, which is only around 8 to 9% growth year over year. Ideally, what I'd like to see from PayPal is them getting their revenue back into the 15% range. We could see that over the last 5 years, they've been really anywhere from 7% all the way up to 30% growth year over year. This 30% growth has a lot to do with the economy at that time and a lot of demand being pulled forward due to the pandemic. However, I think a realistic number is probably closer to this 13 to maybe 16% range, and I would be very pleased if they were able to get back to that. In terms of EPS, we've seen their trailing 12-month EPS shoot up in a major way. A lot of that has to do with the falling off of this negative quarter in Q2 of 2022. However, keep in mind this chart does not show the most recent quarter, and what we'll actually see is their GAAP earnings came in lower than a year ago. And in terms of EPS, we can see that their GAAP number came in at 93 cents compared to $1.15 in Q3 of 2022. However, for non-GAAP, they reported $1.30 of EPS compared to $1.08 in 2022. And if we look a little bit deeper in PayPal's earnings report, we can actually see the difference in the GAAP earnings from 2022 to 2023. 2023 only has a positive impact of 2 cents. This is based off PayPal's strategic investment portfolio, and this actually compares to a positive impact of 34 cents in Q3 of 2022. And if you pull these strategic portfolio returns out of their GAAP EPS numbers, you would get a Q3 2022 GAAP EPS of 81 cents and a Q3 2023 GAAP EPS of 91 cents, which would actually be a growth rate of around 12%. We'll dive a little bit further into EPS numbers here in a second. However, I wanted to discuss a couple more positive things from this earnings report. The first being around their management team. We have seen a lot of concerns over the last year about PayPal's management team as their CEO announced that he was going to retire, as well as their CFO leaving the company. And what we have seen over the last couple of months is more headway and movement on this front. We saw Alex Chriss get announced as the new CEO, and now we have the announcement of Jamie Miller as a new CFO. And she is coming from companies like GE and Cargill, where she has also served as CFO. Another positive is free cash flow growth year over year. We can see that in Q3 of 2022, they announced $1.6 billion of free cash flow. And if you look at the numbers straight up, we actually see that that number falls in Q3 of 2023 to $1.1 billion. However, this is impacted negatively by $0.8 billion by their buy now, pay later European loans. And if we allocate that back into this free cash flow, we actually get a number of around $1.9 billion. Now let's jump into some of their guidance for the rest of the year. We can see that for Q4, they're expecting revenue to continue to increase on around a 6 to 7% basis. Personally, I don't like this. I don't like seeing their revenue falling. What I want to see next year is them get back to growth in terms of their revenue, especially if we start seeing interest rates falling. I would expect that PayPal needs to be increasing the revenue and getting close to that 10 to 15% revenue growth year over year. And for their EPS numbers, they're expecting their GAAP EPS to come in at $1.20 for the fourth quarter. This compares to 81 cents a year prior. And if we look at their non-GAAP numbers, they're expecting to announce around $1.36 of EPS compared to $1.24 a year ago. And for the full fiscal year, GAAP EPS is expected to come in at $3.75, which compares to $2.09 for fiscal year 2022. And if we look at their non-GAAP numbers, they're expecting them to grow by 21% all the way up to $4.98. This compares to $4.13 for fiscal year 2022. And PayPal's guidance around $4.98 of non-GAAP EPS is even higher than the high estimate on Yahoo Finance of $4.71 and much higher than the average estimate of $4.64. And what this tells me is that analysts may need to start bringing up their EPS estimates, which often can be followed by price target increases. And if we use that non-GAAP EPS number of $4.98 and compare it to the current price, we get a forward P ratio of 11.06. And if we want to compare that to where the market's trading at now on a forward basis, that's anywhere from a 15 to a 20 forward P ratio, which would be a price target for PayPal of $75 all the way up to $100. And that would be a 35 to 80% return from the current stock price. Keep in mind that these price targets are assuming that PayPal will trade in line with the market. Obviously, right now we are seeing it trade lower than the market. However, in the future, we could also see it trade higher than the market. So personally, when I look at this earnings announcement, I see a lot of positive things. The biggest concern for me is around revenue. I want to see them in 2024 focus again on revenue growth and get that number back closer to 15%. That would be amazing growth if they can get back to around 15% growth year over year for their revenue. However, I think 2024, it's more likely that they get somewhere closer to that 10 to maybe 12%, and anywhere below that, I would still be a little bit concerned. I want to see them continue to grow their revenue, and I think that will help their bottom line numbers like their EPS and free cash flow as well. But right now, we've seen them focus on what a lot of other companies have focused on this quarter, and that is profitability, and they are continuing to increase their EPS numbers, and I like that overall for the company. So I bought a little bit more before earnings as well as after the earnings release. But keep in mind, do not buy a company just because some random guy on YouTube talked about it. Make sure you are doing your own research and looking into companies that meet your risk tolerance as well as your time horizon. So with all that said, I hope you enjoyed the video. If you did, make sure you drop a like down below. And if you want to see more videos like this one, make sure you hit that sub button. And as always, guys, have a wonderful rest of your day.